Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk about international investing today. We have Terrie Schauer in the room. She's the CEO and founder of MyRoom Gestion, a property management and real estate consulting group based in Montreal, Canada. She is also the leading authority on applying mindfulness principles to real estate investing and has written the #1 best-selling book on the topic, Mindful Landlord. Welcome, Terrie.
Thanks for having me on, Alpesh.
Absolutely. So, Terrie, we start with this question with every guest. Tell us something interesting or funny about yourself.
That's actually I read your list of pre-questions and that was like the most intimidating one of all of them. So I'm glad we're getting it out of the way quickly. So I'll tell you, funny story. So I live in Montreal, which is a pretty urban city. We do have a yard. And I've been having chickens for the last year and a half in the yard, much to some of my neighbors' dismay.
Oh.
But it's all part of the kind of mindful landlord package where we try to keep things a bit down to earth. And I find that going out, getting the eggs, cleaning out the chickens, running after them when they escape from the yard, it's kind of part of the package.
Interesting. So, I know right before we spoke, right? You mentioned you were born in Montreal, then you went all over, you are back in Montreal. But how did you start investing in real estate and why?
Yeah. So I kind of was a property manager before I did anything else. And it was kind of accidental in that. So I went away to study in Toronto, which is the biggest city in Canada. And there was no space in student housing at that point. So I ended up living in this cooperative housing thing, and there was no manager, and the whole thing was a big disaster. People weren't taking out the garbage, they weren't cleaning up, and so I moved out of my parents' house, and the next day my housemates voted me house manager. Wow. And so I did that for the time that I was at school, and then when I left Toronto, I actually didn't come back to Montreal. I kept studying, so I lived in England and then in Vancouver. And I enjoyed that experience so much that I convinced my dad to co-sign a lease on a big house in Vancouver, which I then rented out by the room. So, and that was kind of a lifestyle choice, but also kind of house hacking before house hacking was cool.
Right.
As a way to share expenses and have access to better facilities than I would have been able to afford if I had to just rent an apartment on my own. So that's kind of how that started. And then after that, I moved back to Montreal when I was 26, and I'd been doing it for some years. And I happened to also read the book Rich Dad Poor Dad when I was 22, like we all do, I want to say. But I kind of had this 5 years of property management under my belt without even really realizing what I was doing. And so then I went to, knock on dad's door again and was like, okay, look, I think I'm ready to do this for profit. Can we look at buying a property in Montreal that I'm going to run the way I've been running the rented house in Vancouver? And then that's what we did. And I closed on this kind of rundown property in a rundown part of town. My dad was like, what are you doing? But I then ended up parceling out the rooms and turning it kind of into a home for foreign students away from home. And then from there, things kind of snowballed. Yeah.
No, that's great. And when was that, and how did that investment work out for you?
Yeah, so that was in 2006. So
wow.
Yeah, a long time ago. Yeah. And it's actually, that's the only property of the initial purchases that I still own. I went on to buy a few other triplexes, and it's actually on the market now, but it worked out very well. It's on sale now. We bought it for $325 and it's now on sale for 900 Canadian.
Pretty sure.
So,
yeah. Oh, that's awesome. So let's talk about, and of course, I'm based out of US. Most of the guests I interview are based out of US, and we talk a lot about multifamily, apartment, and mobile home park, etc. Can you explain the real estate market in Canada?
Okay, so I mean, Canada's a really big country. Like, if you were talking about, let's explain, the U.S. real estate
Right.
market, you ask,
Yes.
like, have your token American on and be like, explain the U.S. real estate market. And
Right.
so I think the answer is that there are national factors that affect the whole country, and then there are sub-markets that are actually
Correct.
very different. So I'll start kind of with the macro and tell you what's going on in Canada in general, which is that our market has been considered very safe and stable by the international community, by REITs, by foreign pension funds. And we really didn't have a 2008 correction. And what that means is that basically, like, our market has kind of been continuously trending upward. And then in COVID, we went through the same kind of sugar high that everybody else did, except we never had the correction that the US had. So we had the
Okay.
same, kind of conditions of low interest. We now have an inflation problem. And like, we've been following the Fed cranking, our central bank has been cranking interest rates. But the difference is that because I think it's something like 10% of Canada's GDP is tied up in real estate, so we're quite vulnerable to what's happening now. And if you look at the top three countries on the risk, like the real estate risk indicators, Canada's behind, I think, Australia and like a Scandinavian country. I want to say
Right.
either New Zealand or Denmark or something, but we're like right up there with the highest amount of real estate debt and the most indebted households worldwide. And so, I think raising interest rates is going to be challenging in any environment, but in Canada, I think it's going to really, it has potential to correct severely. And so then that filters down into individual markets differently.
Correct.
Toronto and Vancouver are, of course, the
Are
cities everybody knows
are very
about.
susceptible right
Yeah.
now.
Yeah, exactly, because they're like way overvalued.
Yeah.
Montreal is kind of like, the third place. I don't even know if we're in third place, to be honest, because our property values in Quebec, which is the French part of Canada, have been
Right.
traditionally like a lot lower than the rest of the country. And so we have not had this like meteoric rise that goes out of people's capacity to pay. So in Montreal, the people's incomes are still in line with property values. It's now bumping up against the top, but we're not in the environment of Toronto and Vancouver. But the central bank makes decisions for Toronto and Vancouver, and we kind of eat what's left over.
Right.
So, in my sub market, if I can call it that, we are expecting a correction, perhaps not as intense in Toronto as in Toronto and Vancouver, but it's also that everybody working now has no living memory of a downturn. Like every time
Now,
I talk to, American investors, I was like, oh, 2008 this, 2008 that. It's like,
2000 and
yeah,
2008,
yeah.
almost everyone knows.
But we have no, like our last,
Ah,
bad spell was before everybody was working. So, I mean, it's
right.
an interesting time. It's an interesting time.
No, that would be interesting, and I agree. So, real estate market is pretty market specific, and we call that as MSA here, right, in US. And we know here, like San Francisco, LA, New York, they are primed to correct, right? But if
Yeah.
you look at the tertiary or sub markets, or they will do fine. And I think that's the same issue. I have a lot of friends in Toronto, and they have told me, one of the friend has been buying and selling a lot of properties in Toronto, and he told me that one property he had bought back in 2006 for $1 million and sold it in a year or so. It's worth over 3 million right now, and I'm like, whoa, that's about time.
Yeah. Yeah. Yeah, for sure.
So then, of course, all of us know about Vancouver and Toronto. Why invest in Montreal?
Yeah. So listen, I mean, this is actually very interesting because I think Toronto and Vancouver were destinations for foreign investors, and
Yeah.
both of those I think Ontario, it's an Ontario-wide policy, but they both
Yes.
put in foreign buyer breaks.
Yes,
So they have
correct.
surtaxes on foreign buyers. And then what happened is that as things kind of cracked down on those two metropolises, then the next stop is Montreal. And
Mm.
in the last 2 years, like that's actually what's happened. And I also happen to have my broker's license. And just anecdotally, they now force us all to do like, mandatory training on money laundering.
Of
And
course.
part of what's in the money laundering course is that before those kind of activities were focused in Montreal and Toronto. And now, because they've kind of tightened, the bootstrings a little bit on those metropolises, now Montreal is kind of the next port for that. So I mean, I think, in terms of foreign capital, like there is foreign capital coming into Montreal. Why is it interesting? We are kind of the market that people forgot. And I think that, especially French Canada, we're pretty like tenant friendly, like think New York, think California, we're a pretty tenant friendly market. And then there's the additional barrier of the language. And so even, investors from the rest of Canada, like really don't like to come into Montreal because
Correct.
you basically need like a local partnership. So you can make money. There are, people like I'm part of, various investor networks. So people have all their different kind of strategies for how to do things on the ground here, but you kind of need a local partner because like everything functions in French. The laws are a little bit different. And it's going to be, you can survive in English, but you kind of need somebody who knows their way around the system here because it is pretty regulated and it's also just another language.
Oh, that makes sense. So, can you share some numbers about Montreal? Like, what's the median house price and what kind of rent you can get?
So really Montreal, actually, there's some very interesting stats here. So Montreal is actually the densest city in North America.
Wow.
We have very little single family homes. Like on the island, there's almost none. The rental market of single family homes is pretty non-existent. We also
Okay.
have the highest number of renters in Canada. So I think something like I want to say it's something like 47% of people in Montreal are renters. So we have like a very
And
high.
is there a reason why? Like why would
So I
they?
mean, Quebec was traditionally like kind of poorer. It
Okay.
was also Montreal's kind of oldest city. And so you think New York, like a
Mm,
lot of people when they came in started
right.
here and New York kind of built up. We're also an island. So
Mm,
they're not making any more space. Like in the
right.
same as Manhattan, you have to go up. In Montreal, you
Yeah.
kind of also have to go out. Toronto sprawled, whereas like
Right.
Montreal kind of densified.
Yeah.
And so all that to say, I mean, I could tell you, I think the median house price in Montreal now is, I want to say something around, I want to say something like 650K
Okay.
for a single family home. But like, that's not how most people here are housed. Like a lot of people live in condos. So there's a lot of like owner occupied condos. And then like 50% of people rent. So you're looking at apartment buildings, be they like the more traditional or like triplexes.
Yeah, that's what
I'd
I
say
was
like,
going to
yeah,
ask. So you have more
yeah.
duplexes, triplexes.
And then the rest are actually like bigger buildings. So,
Okay.
8 units, 30 units, 40 units, whatever it is. And so like, if I could tell you, I mean, it also varies like a lot by sort of by borough. I mean, I could say on average, if you did citywide, the price of a triplex might be, I don't know, 850,
Okay.
800K. But that ranges from, in the worse off areas, somewhere around, 500, 600, all the way up to like 2 million if you
Right,
go
of course.
into like
In the
kind of the
posh areas, yeah.
nicer areas. I mean, we kind of, when we were looking at like multifamily, when we try to buy, if you can get units at around 150K a door, you're doing
Mm-hmm.
very well.
Oh, okay.
So
And
yeah.
what's the rent on those? Like if it's a
Oh, well, again,
triplex?
that varies very
Right.
largely. So market value rent, let's say if you're talking about a 2 bedroom, again, it varies a lot by borough, but like maybe I'm going to say, I don't know, $1,300, $1,400 for a 2 bedroom. But because we have such strong rent control, when you purchase a building, you might have somebody paying like $600 for a unit like that.
Right.
And most of the buildings that are transacted are actually those kind of buildings because like landlords don't keep them as a profitable part of their portfolio because the amount of rent that they produce is so low. And
Uh,
then that's kind of where, local savvy is able to make those into profitable deals because there is this kind of rent control hangover. And if you can, optimize your rents and like kind of deal with the rent control situation, you're able to really make a lot of money because of how you can increase the multiples at which the building is sold, right? Like every $100 more you make of rent, you're able to then add that on top of whatever, it's times 12, times 20 kind of thing. So
right. So, just an example, let's say, we can take the median triplex price, 850 grand, and you
mhm.
said the rent maybe because of rent control, it's what, 600 or maybe 1,000. How can a new buyer, the person who is buying, how can they raise the rent? What are some of the things they have to go through to
Mhm.
circumvent the rent control?
Well, I'll tell you about like my business model. So, I tend to look for poorly managed properties. And then my secret sauce will be to just put them under professional management. And just by putting the building under professional management, in my experience, there's about a 30 to 40% turnover, because the current landlord, like if and this is a poorly managed building. If you have a well-managed building, it's a different thing. But like for me, that's where the opportunity is, because the current landlord has probably been like, letting things slide that they shouldn't slide. They are not familiar with the rental board. And so just by like really managing a very tight ship and, cracking down on problem situations, you're able to generate that turnover and then adjust your rents to market value.
So can you share an example on how you are able to circumvent the rent control though?
Well, I mean,
Like
like
basically
it's not.
when the people move out, you are able to raise the rent or
Yeah. I mean, pretty much that's it. Like we have a rent control kind of a system, where every year you enter your expenses into this government produced spreadsheet that
okay.
spits out the rent increase you're allowed to impute. But this is one of the secrets to this, is like most landlords don't even use it. And when you use the spreadsheet, you'd be surprised, because you're actually allowed to increase a lot more typically than people think. And so, a lot of the landlords here, like who are not managing professionally, will be like, oh, I can only increase my tenants $10 and we're only allowed a 2% increase. Yeah, but did you fill out the form? Because like let's say your insurance goes up, that allows you to increase dollar for dollar. And we all know insurance is going up like crazy.
Of
So
course.
you have to actually like play out the chess game. And this is when I say people don't manage professionally. So if they've been giving $5 increases for the last 15 years, they've left a lot of money on the table, that even by respecting rent control. So it's not necessarily like, messing with the system. It's just taking what you're allowed to take if you actually know how to do it properly. So that's like, well, one possibility. And the other one is, with turnover, it's actually interesting, because we're not supposed to raise rent even between tenancies. So you're supposed to increase by what the government allows you. But of course, there are landlords associations who have legal workarounds for this. So there are ways of working around that, because if you do a lease transfer instead of signing a new lease, the tenant has a certain amount of time to like contest. And so there's sort of loopholes there in terms of how you can adjust the rent to market, and not go re-renting a 2-bedroom for $600 if market value is $1,000. So.
No, that makes sense. So let's talk about now US investors, right? How can US residents invest in Canada and most probably Montreal?
Yeah. So, I mean, like I said, I think local partnerships are really important. I think so that involves networking, and I'm part of an organization called the Real Estate Investors Club, which is actually the only English language organization in the province. So obviously, like anybody who's looking to get involved here, there are a bunch of francophone groups, but like we're kind of the one-stop shop for people who want to get familiar with the market. We have online events, we have monthly meetups. There's even like training that people can do. So that's a possibility of kind of tactically knowing and making the connections that you need to be successful here. From an administrative point of view, so Canada is actually going to come in with a foreign buying freeze, I think, starting very soon. I think it might be the end of the year. But the thing with this is I think they're freezing persons from purchasing, individual persons who are foreign nationals and non-residents from purchasing. So I mean, that's like, I think it's really something kind of, in my opinion, it's like something a bit populist that Justin Trudeau came in with, because there's this like, affordability problem. But like, honestly, just open a company and, give it a local address. And, there's like a very easy workaround for that nobody really talks about. Like, I don't think the big players or people who are smart about the way they do things, I don't think there's going to be much difficulty there.
I see. So I can open an LLC or something in Canada, and then you don't have to worry about it. Don't they check that if this, the owner or the manager is based out of US?
Yeah, well, you have, because there are different statuses there, right? Like if you open a holding company and the holding company is like registered or incorporated like in Quebec or something, like behind who is the owner and whether or not you live here, I mean, I don't see that they're even going to necessarily know that. You will have to, your company will do its taxes in Canada as a Canadian company. And what's the ownership structure of that? I really don't see how they're going to control it. And I don't even see how they're going to necessarily know, because, in your ownership declaration, like, you have various like roles, and you could name an administrator, but like, who actually owns the company. And then, you could have a company behind the company. And then how are they going to, know?
I see. And is there any way to get, let's say, someone opens a LLC and goes through all that? Are this US residents or this Canadian-based company able to get mortgage or loan from Canada, or do they have to purchase it for cash?
No. There's like any company that is registered here can get a loan from, Canadian banking institutions. Our banking sector is like pretty strictly policed. So there are 5 major banks. There are then other types of lending institutions. But from what I know, the CMHC, which is our like, Fannie Mae, Freddie Mac kind of thing, they guarantee a lot of multi-residential mortgages and also personal mortgages. Like, from what I know, they will underwrite for companies. Well, I know they will underwrite for companies. And I don't think the fact that there's a foreign owner in there somewhere is going to change anything, because they're basically financing the building with multi-res, right?
I see. So they don't look at the, because I remember Canada has a social security number. I can't remember what is it called, SIN or something.
Yeah.
So they don't look at that. Because I did get my Canadian residency back in 2005. And so, but I had to let it go because I never moved there. So I remember it's SIN. So they don't run credit or check any of that.
No,
Because
okay.
even in
Let me
US, they
be
do.
no. Let me be more precise. So we have a line in the way our mortgage financing works of what's considered residential and what's considered multifamily. So 5 doors and below. So
Right.
single
Same thing
family to
here.
5 doors is considered residential. And so in that case, yes, they are going to want to know about you, and they are going to want to have debt ratios to analyze. But if you're looking at multifamily, which is basically what I do, they just want to know that the building makes money, and then there needs to be an ownership structure behind that. But your SIN number is not really necessarily going to come into it. They want to know the track record of the company, right?
I
So.
see. Okay, no, now that makes sense. So here as well, anything 4 doors or below is a residential, and then over 4 doors is a commercial property.
Yeah.
So that makes sense. So let's talk about the market overall now, and we did talk about it a little bit. Are you seeing any slowdown in the residential market there in Montreal?
Yeah. So we're talking single family, or you're talking investment property?
Both.
Yeah. So single family, not so much. I think part of what we are seeing is because single families are very like a coveted asset class here, they are still transacting. And I think people are very happy that the bidding wars are over. So what I see, like even in my brokerage, practice now, is that there are people we're kind of sitting out the frenzy, and now they are like, oh, whew, this is so much more relaxing. And I'm like, yeah, you think whatever
Right.
6%
Yeah.
interest is relaxing? Like, I don't find that relaxing. But if you're comparing it with the bidding war, I guess it is. So like, let's say owner occupied assets are still transacting at a reduced rate, but it's still moving. Investment stuff is like very calm right now.
I see.
And I think it's calm because the sellers have not completely adjusted their prices, whereas investors who are running the numbers, like they're priced at 2% interest. Like the sale price is a function of 2% interest, but that's not the reality anymore. So the market still kind of needs to correct. And like of us who are sitting kind of watching this are thinking, okay, well, mid-January, beginning of the year, we're going to start seeing some distressed sellers having to move their stuff, because some people have private loans or floating rate mortgages or things like that make it difficult for them to keep carrying those assets month on month. So
no, that makes sense. And I've been, of course, looking at the market overall here in US, and especially submarkets, and talking to a lot of realtor friends, and they are saying exact same thing. Sellers and buyers have not figured out this market yet, right?
Yeah,
Sellers think that I can command the price which was available just 6 months ago, and buyers think because the market, the interest rate has gone up, I can pay 20-30% less than the price 6 months ago. So it's at a standstill, but I'm hoping and keeping my fingers crossed that we see some good correction so that we are able to jump in.
Yeah. I'll just like kind of expand on that a little bit. I was so I have a podcast as well, and I just recently interviewed like a guy who has a big private equity firm in the city. And one of the things he said to me, and it really stuck in my mind, is that these inflection points are the most challenging. In a buyer's market, we know what to do. In a seller's market, we know what to do.
Yep.
But in an inflection point, we're all kind of like, okay, which way is the ball
Right.
going to bounce?
Right.
And we
Yeah.
don't totally know how to behave.
Exactly.
And so everyone has to just adjust to the, the new normal.
Yep. Yeah. Everyone is confused, and then any transaction they want to make, they want to make sure that they are not making any mistakes. So seller
Exactly.
thinks, if I sign this contract, would that be a mistake? So everyone wants to see what's next. So I remember in your bio you had mentioned, you also study trends. So what trends or threats should we be talking about that we are not talking about?
Yeah. I mean, I think we might have like mentioned some of them before. I mean, I think everybody in Canada expects things to correct, but I think that maybe people are not mentally prepared or psychologically prepared for the size of that correction and what it actually means on the ground. So let's put that aside because I think that's an important thing to talk about, but I think lots of people are talking about it. I'm more concerned, of the whole affordable housing issue. And I
Oh,
think,
yes.
with, because I manage properties and I own properties in low income areas in the city, like I really see the way that segment of tenants is being squeezed and
Yep.
how COVID was very difficult for them on multiple levels. A lot of people lost their jobs, and
Right.
it wasn't the laptop classes, right? Like, I guess it's sad to say, but like people like us, okay, we were holed up at home and we were like, okay, well now I need space for a home gym. Let me buy a bigger house. But
Yep.
I think for some people who were trapped in small apartments that they lost their livelihood and couldn't, look after themselves in the same way that they did before. I think it's very challenging. And we have high vacancy rates. Canada has just opened, I think we're going to double the amount of immigrants that we take in over the next few years. The government wants to add another, I think, 10 million people to
That's
Canada.
what I'm hearing. So
Yeah.
I heard Winnipeg is going crazy because they are like they have opened their arms where Toronto stopped allowing a lot of immigrants.
Yeah. Yeah.
So,
Yeah. So I mean, like I think the good news for investors is that this kind of population migration is going to be very good for us. And even if there's a temporary down, I think the trend longer term is upward because of how many people we're adding. But to me, the concern is more for the plight of, the let's say bottom 30% of urban tenants who are really going to get squeezed by what's going on. And I think that if the government and like private landlords, like if as a society we don't find an answer to that, I think we're going to be having some real serious problems. And Canada's like a pretty socially conscious place. I'm a bit of a geek for this, so I read a lot of things. And our poverty doesn't necessarily follow the same trend as it does in the US because we have very high minimum wage and we have a really good social security net. But for example, if you talk about like single moms with kids or elderly people who are those that are the most precarious financially in Canada, like I think in urban areas, it's going to be a real challenge for those people to kind of make ends meet and house themselves. And, and that, as much as I hate rent control as an investor, I can really see, especially with like the elderly, the way that it protects them. Like I have some tenants that have been in their units for 30 years and they're paying half market value. Like we just leave them alone because they are actually on small pensions or government pensions, and they're a group of people that is vulnerable to increasing cost of housing.
right. And I agree. This affordable housing thing I'm watching in my market as well, and overall US. That is why we moved from single family to apartment building and now mostly focusing on affordable housing via mobile home parks. So we buy large mobile home parks, we turn them around. Of course, we raise rents, but we also make it a quality place for our tenants to stay, right? Because most of the time, these mobile home parks are run down, and the people who stay there, they are fine with it because they have to pay less rent, but we want to give them a quality place to stay. In this world right now, the affordable housing is the key. So I agree. So what macro trends have contributed to what we see on the ground today? Like, is it same affordability crisis, rising rents and home costs, or anything else?
What do you mean by metro trends?
Macro trends.
Macro trends. Oh, okay.
Yes.
Macro trends. Yeah, I mean, that's also a really interesting question. So I'll give you a little history lesson. The financialization of housing. So, let's say 30, 40 years ago, the capacity of people, be it investors or single family homeowners, to contract massive amounts of mortgage debt was not what it is today.
Yes.
The assetization of those mortgages, as you guys learned in the US in 2008, has also made debt into a commodity.
Yep.
And so with the availability of credit, that creates an automatic rising of house prices. I'll give you an example. My husband's from Algeria.
Oh,
And
okay.
in Algeria, they don't really use mortgage lending to buy houses. And so if you were to hear the house prices there, it's almost laughable. Like it's under, $100,000, but because there's no mortgage lending. So people are basically transacting property for the price of a down payment because there is there's no credit market behind that.
Right.
And so, I think there's this explosion of credit is one thing. There's also urbanization. So if you look at like the trends, Canada has, I don't have the stats so much in the US, but Canada has like urbanized at a rate almost fastest of any Western world, like Australia. Basically, we've urbanized very fast. And so what that does is it creates a premium on the urban centers that we have. And you can see with Toronto and Vancouver, what's happened. Like those are the most overpriced markets in the world. Montreal has lagged because of the French language politics, but we're slowly catching up, to where Toronto and Vancouver are. And so that creates a crunch on the communities that lived in Montreal for a long time, or the low income workers that live in the city suddenly turn around and find that there's not enough housing for them. And then obviously supply. And, there I kind of fault a little bit of the bureaucracy here. And, I know in California, you guys talk a lot about the NIMBYs, right? Like, I don't think here,
not in my backyard.
yeah, here the biggest NIMBY is the city. Like they are always talking about scapegoating landlords, but to me the biggest issue here is that they just, it's so difficult to get projects approved. It's so difficult to build. Like if I wanted to add a basement suite in my house, which I would do, I don't know how long I would have to wait for the permit, and I don't even know if they would allow it. Whereas if you just across the board allowed every single family house here to add a basement suite, like you would double the footprint of available rental units for those kind of things, because as house prices go up, people need an additional income to be able to afford the house in the first place. But the city's just really not kind of open to approving those projects. And so, yeah, it's unfortunate.
No, that makes sense. I totally agree. Things especially this urbanization, it's a big issue, right, overall. But talking about the credit as well, and you mentioned Algeria, that was pretty similar to most of the countries in Asia and India, including, right, where when I told my family back home that, oh, I bought a house, and they're like, oh yeah, you took a loan, yeah, 30 years. They're like, who the hell is going to pay for 30 years? Like, yeah, that is how it works. And now US is looking at introducing actually a 40-year mortgage. You know what that would do to, again, asset prices.
It's ridiculous. It's actually crazy, because I was reading a book about this not long. I think it's called The Political Economy of Housing by Greg Fuller, who we ended up interviewing on the podcast. But like, it's really fascinating because you can chart the explosion of credit markets and plot it along the increase of house prices. And every time the credit laws get sort of loosened and credit explodes, well, what happens? The asset price just increases as a result of that.
Right.
And so, yeah, I mean, it's tough to know what the right answer is, because it's like, temporarily, you're going to allow some people to buy bigger houses, or allow some people on the bottom rung of the ownership ladder to get into housing. But ultimately, the whole market's just going to bump itself up, and you're not going to solve the problem.
Exactly. No, this was awesome. Thank you so much for, sharing a lot of the golden nuggets, as well as a lot of information about Montreal and Canadian markets. Let's switch gears. Are you ready for fire round?
Yeah. Okay, let's go.
Would you be changing any business or investment strategy because of this inflation or impending recession?
Well, we have a capital crunch here because as you can't liquidate your assets, it's more difficult to keep investing. So I think really what's happening is that us investors who want to keep going have to get more creative. So it's a question of negotiating more balances of sale, being more creative in how you go about purchasing properties and raising capital. So I think that's going to be the main change in the next 6 months.
That's awesome. Favorite real estate or finance or any other related book?
Well, I'm going to mention my own book, Mindful Landlord.
Yeah, I'll have to check it out.
Yeah.
Any tool or website you recommend or you cannot live without?
Yeah. So for people who are interested in learning more about Canada, we have the CMHC here, which is kind of our Fannie Mae, Freddie Mac equivalent, but they are also collect a ton of statistics. And so if you want to learn about different submarkets in Canada, you want to see what's the overall trend, they have all kinds of great free resources on their website, and they're like kind of like almost like Statistics Canada. Like their research is very solid. And if you want to, like, let's say, identify even submarkets, smaller submarkets than Montreal, they will point out kind of which metropolises might be interesting from a vacancy rate and appreciation point of view.
That's great. Any advice for beginner investors?
Just do it. No, I think like at this point in my career, I teach a little bit, I coach people, and I think, for people who are kind of on the fence, like there's never going to be a perfect time. There's never going to be a perfect time. And it's better to have an imperfect action than 1,000 perfect inactions.
Oh, that's such a great point. And this is what I tell my investors and friends all the time, right? Everyone thinks that, oh, I got to get into that blockbuster deal. I want that first deal as my best deal. And I'm like, no, you want to learn as much as possible from that deal so that you can get your journey started. So thank you. How do you give back?
Well, I mean, I think I've started, coaching and teaching. The book was also a bit of an attempt to do that. I have a podcast called the Real Estate Investors Club podcast, where I just have conversations just like this one, to try to, get some good information out there. And I'm really very, grateful for the people that helped me along my journey, that I actually, like, I never really paid for coaching and investment. I paid for other kinds of coaching, but never really in the investment field. And so everything I learned was either self-taught or somebody who just gave me free information because they wanted to help me out. And so, for me, that's kind of what I try to do with the people I meet. I also, in my goals, it is to, continue doing kind of the affordable housing thing, but maybe find a way to be able to keep the rents even lower than we've been able to do so far, because I'm really aware of the fact that there's, a need for in certain communities to have like quality affordable housing.
That's awesome. How can my listeners reach out to you?
Yeah, so my social media where I'm the most active is on LinkedIn. So you just look my name, Terrie Schauer. Otherwise, my book has a website, so mindfullandlord.com, or my personal website is at terrieschauer.com.
Thank you so much, Terrie, for your time.
Thank you.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!